Hello and welcome to Tolve Closes with Amanda Tolve, myself, your residential realtor. I service New Jersey, mostly in Bergen County, Essex County, Passaic County, and then some of Morris County and Hudson County as well. My job is to make sure that the specific needs of my buyers and sellers are met. It is also my job to guide them from the very beginning of the process to the very end of the process. So today I'm going to give you 5 ways that you will benefit from being a homeowner. And in this crazy market, lots of people, they get overwhelmed or they get nervous and they think that, oh, maybe it's not a good time to buy right now, or maybe there's too much competition or it's just not worth it. But I'm here to help you understand that there is a benefit of being a homeowner. And I'm going to break it down in 5 steps. Of course, there's tons of benefits, but these are 5 that I picked to share with you. So let's jump right into it. One benefit of being a homeowner is the stability in payments. So if you're locked into a 30-year mortgage, your payment is going to be consistent for those 30 years. The only time that will change is if your taxes go, or if and when I should say, your taxes go up, or if your homeowner's insurance is changed. Which those 2 things as well, you kind of can predict them because you can call your town and see what's the, there's a limit on how much they can increase the taxes annually. So you can find that information out from them. There's also the homeowner's insurance. If you're going to make improvements or something to the home where you're going to need that additional coverage, you can call them and get a quote before you do that. And we actually have Ricky here, who is a lender. Ricky, do you want to jump in and say hi? Okay. I don't know where he went.
Hi, everybody. Ricky here, Hudson United Mortgage.
And then if you want to just go over the mortgage payments or how much they can actually change or if they can change over the process, over the 30-year.
So, most of the loans that I have done, with the pandemic and everything like that, believe it or not, a lot of the adjustable rate mortgages kind of went out the window. You were getting a lot better interest rate with the adjustable mortgage compared to the 30-year or the 20-year or the 15-year fixed program. However, that is not the case anymore. 30-year fixed, even though the rates are still going up, we are still in a relatively good market. But for the most part, the only time your payment is going to go up or down depends on your insurance going up or down, your insurance premium, or your property taxes going up or down. Your principal and interest is going to be fixed for the duration of the 15, 20, 25, or 30-year term. And if it's a 30-year term, you're obviously going to be paying more interest than principal for the first 15 years. However, the latter half of that loan, you are going to be paying more principal than interest. And you can always make principal only payments as well to knock out some of that interest and gain more equity a little bit quicker.
Right, exactly. And that's good to know because a lot of people are scared that their payments might change or that the numbers change, but they can't. It's a fixed rate. So again, if you own the home, you have more control over your payments. If you are renting, you can't control your monthly bill. So if your landlord adds a pool or if they add an extension to bring more value to their property, your rent is going to go up. And that's not something that you can control because, again, they're the landlord. So they need to pay their mortgage payment. And they're using you, obviously, as a tool to do that. So you always have the option of moving, of course, or continuing to pay. But really, who wants to keep moving? Running away, I should say, from rent increases. So it's better to be in control of your payment and have the stability rather than relying on your landlord and hoping that they don't change the rent or it doesn't get increased. Now, a second benefit is that the rent in the market right now, especially, may be higher or equal to your a mortgage payment. So don't forget that, the people you're renting from, like I just mentioned, they're investors. This is their investment. So they need to be able to make their mortgage payment as well. So your rent payment is a reflection of what their mortgage payment is. And they also want to make some money off of that as well. So when you're renting from someone, they're actually benefiting from their home ownership. So why wouldn't you want to just do the same, or maybe not rent out, but you'll benefit from home ownership and paying your own mortgage rather than paying someone else's. Now, there's other reasons that why people rent, and I'm not, against it. They, sometimes renting is better for people, but for our case today, since we're talking about the benefits of home ownership, we're going to stick to that. So this leads to my third benefit, which is you're making a good investment. So not only is the house a home, but it's also going to become an investment for you, whether you want to use it, as a retirement plan, for when you want to retire. Not all of us, have the 401k plans and stuff like that. So you can buy investment properties to retire off of. Maybe you want it as something to leave to your children, or whatever it is, whatever the terms, whatever long-term investment you're thinking of for your specific life and needs. This is a very good investment. And there's different ways to use this investment. So when you pay your mortgage, you're building equity. And the faster you pay that down, the more equity you'll have and the less interest you will have to pay on that loan. So there's no, another good thing is there's no prepayment penalties. So that's just New Jersey standard now. So if you want to pay it off early, you don't owe any other interest, you just pay it off early. You also have the option to refinance to a 15-year loan, which helps speed up. And I know they can be a little more expensive, but they're a little more they're more fast. You can get things done and end up paying a lot less. And then you have other options once you're done paying the house off. So if that home, if you want to live mortgage free, say you don't want to pay mortgage, principal and interest anymore, then you'll just have to pay for the taxes and the homeowner's insurance, which will be a lot less than having to pay the principal and interest on top of that. So maybe you just want to live mortgage free. That's your goal. Or maybe you're using the house for your retirement plan. So when it's all paid off, you can have the option of selling that big home that you have, or bigger home, I should say, that you have. And then you're downsizing to a condo, maybe somewhere in Florida because you're ready to retire. So then you have the money left over from the house. You can use it for whatever your life requires. You can also turn it into an actual investment property and you can rent it out. So maybe you will, now that it's mortgage free, and then that money's just coming in, and maybe that's the money you're going to be living off of as your retirement plan. Of course, once you pay the taxes and insurance. Anyway, you get the idea. Buying a home is probably the biggest investment you will make, and it also will be the biggest sale that you will make. So, here's where I want to add that it's very important to be working with a realtor, any professional, because you're dealing with such a large investment, and you want to make sure that whatever your end goal is met. So you want to make sure that you get the most for your money and you get it done quickly and efficiently. And I also wanted to bring Ricky back in here real quick because I did speak briefly on ways to pay down the equity quicker. So if you want to chime in and give us, I know I mentioned the 15-year loan or refinancing, if you want to tell us what are the quickest ways basically to get that equity built up?
So obviously it all depends on how much of a down payment you're going to put. You can always put more money down at initial contract or after contract. You can always make principal only payments if you wanted to. That is always an option because you are just straight eating away at your principal. You're not attacking on any interest. You make your minimum monthly payment, throw a couple $100 on the side as an additional payment, whatever it may be. Another option.
And that cuts years off the loan, correct?
It does. It will. It'll definitely eliminate your interest. It will cut years off your loan. So here's a tidbit that not too many people realize, biweekly payments is another great option. What are biweekly payments? There's a difference between biweekly and semi-monthly. For those of you who are getting an income and you're semi-monthly, you're going to get a paycheck on the 15th and 30th of every month. Whereas your biweekly, you're going to get paid every 14 days. So what does that mean as far as mortgage payments? If you sign up with your banking institution, if they offer biweekly payments, which they should be able to help you out with that, you're going to make, and so 2 months out of the year, you're going to be lucky enough to get 3 paychecks that month, the way it falls down, usually like on the 2nd and the 16th, and like again on the 29th or 30th. So 2 months out of the year, you're going to be making 2 extra half payments a year. So that's 2 half payments, which means 1 extra full payment for that calendar year. What does that do on an average of $300,000 to $500,000 loan? That 1 extra payment is going to reduce your loan life on average about 4 years. So your 30-year loan, by making biweekly payments, is now a 26-year loan. So that is another way to do that besides making principal-only payments. Obviously, you can always do a shorter term. 20-year loans or 15-year loans, you're going to be attacking a lot more principal faster and sooner with those payments. Those 15-year loans, you're going to be attacking more. You're going to see twice as much principal being attacked than the interest on a 15-year loan compared to a 30.
Nice. Thank you.
You're welcome.
Okay, so let's move on to the fourth benefit, which I mentioned briefly earlier. It's not having to move, from house to house when you're renting, depending on if your family situation changes. So for an example, if you have an oopsie baby that you didn't plan for, or if your mother-in-law who was only supposed to stay for a month is now staying forever, these are situations that we can't help, but we need to adjust. So if you're renting, you would need to move to a bigger place and you would end up paying more rent. However, if you own the house, you can create your own additional living space. So you can add an extension to the house. You can turn the garage or attic into an extra living space. There's lots of things you can do. And also while you're making those improvements, you're adding value to your home so that it's worth more when you sell it. So again, that will increase the equity and will help you get more when you eventually decide to sell. So as a renter, you can't expand the home. You'll end up having to move to a new home and pay more in rent, as opposed to being a homeowner, when you'll be able to make the improvements in your home, not increase the mortgage payment unless the property is appraised again and then it goes up a little bit, but we don't want to go into that. But as a homeowner, you can make the adjustments and then it adds value to your home. So when you go to sell, you're actually benefiting in that way as well. And then the fifth and last point ties into all of the other benefits that I have spoken about, and that's being able to cash out when you need to. So even if you're not fully done paying your mortgage off, maybe you're only halfway, maybe you're only a quarter, you still have equity in that home. So you're still able to do a cash out refinance. And I'll let Ricky talk about this in a second, but let me just finish the rest. So some examples where this situation would be useful is if maybe you have a lot of debt that you need to pay off. So you have a lot of credit cards, maybe your student loans, you want to get rid of all that, catch up on some things. You can use the cash out refinance for that. Or maybe you, someone in your family is sick with cancer, God forbid, or they got severely injured and you need money to pay the medical bills. You might want to use it for that. Or maybe you just want to build your dream deck in your backyard. So you want to do some renovations. So you want to borrow against your house to do that. So those are definitely some options. And as long as you've been making, of course, your mortgage payments on time, you can use that equity to take money out to do whatever it is you need to do. So Ricky, if you want to jump in and just go over briefly what, the cash out refinance is.
So cash out refinance is taking out, you're borrowing against your mortgage. As long as you have enough equity in the home, ownership in the home to take out some extra cash, you are more than welcome to do so. It's your house, it's your money, it's your equity. You can do that. Most refinances. So if you're putting, just for those who don't know, if you're putting a contract, if you put I'm just going to keep easy numbers on $100,000 loan. If you're putting 20% down, that's $20,000. That means your loan to value, your ownership versus what you're financing is at 80% because you have to finance 80% of your home, which means you have 20% equity. So over the few years that you're making your mortgage payments and you're building more equity, attacking some of that principal, your ownership, your equity is going to go, further up from 20, 22, 25, 30, et cetera, et cetera. If you're in a bind and you like Amanda was saying, if you Maybe your kids are going to college. Maybe you want to take a vacation. Maybe you have a family member. Maybe you want to do debt consolidation. Maybe you have a adjustable mortgage and your balloon payment's going to come up, or your interest rate's going to spike after that first 3, 5, or 7 year term. Or maybe you have a home equity line of credit that is just continuously rising, and you want to roll that into your first mortgage payment and get it all under one roof. You can certainly do that. Most lenders will let you cash out back up to that 80% loan to value. So if you've got 50% equity in your home, that means you own half your home. You can take out at least another 30% of your home's value. So, and if you have any questions on that, I'm more than happy to help. Amanda's got my number. Reach out to her and she'll direct you my way.
Awesome. Thank you, Ricky.
You're welcome.
Okay, so those are the 5 benefits that I wanted to talk about today. They all have to do with money because, let's face it, even though money isn't everything, money is part of life and we need it to live, especially comfortably. So again, let's go over the 5 benefits. I'll just summarize them so you have the points of home ownership. Number 1 is steady and consistent monthly amounts that you have control over. So that controlled payment every month. The second one is your mortgage will probably be less or equal than it would be to paying rent, especially in today's market. The third one, it's an investment for you and your family, probably the biggest one that you'll make. Well, it is for most people, it is the biggest investment they'll make in their lives. And number 4, you don't have to move like you would with renting. You can stay and make changes to your home because it's your property. And number 5, you can borrow against your house and take out cash when life happens and you really need it, which is good because again, it's your property and you can use it for what you need to use it for. So those are 5 great benefits of home ownership. Of course, there are many more, and if you would like to discuss those, or if you need some more information on home ownership, you can reach out to me directly at 201-456-1842 or at my email, which is amanda@tolvecloses.com. And remember, when you're making this big decision, it's a big investment. You want a professional by your side because you're going to need the guidance. It's like I'm not going to go to the doctor's office and not have the doctor there and just perform my own surgery. That's a little extreme, but you get the idea. You don't want to, same thing with real estate. You want to make sure that you're getting the best value, the best property for your situation, your family, and whatever your long-term plan is for your investment. And I'm here to help you and guide you along the whole way with that. And then also, I just want to shout out Ricky here, who can jump in and give his contact information. And he's very good at what he does, and he has a lot of information when it comes to mortgages.
Thank you, Amanda. I appreciate that. If you guys want a free consultation, I am available night and day, even on weekends. So you can reach me on my cell phone, best phone number to reach me, which is area code 321-634-2552, or you can shoot me an email at richard.cusio@hudsonunited.com. Spell my last name C-I-U, Z like in zebra, I-O.
Perfect. Thanks again. And thank you everyone for joining Tolve Closes. I am Amanda Tolve, your residential realtor.